you know exactly what goes into your mortgage payment so that you can budget to know exactly how much home you're going to be able to afford? Hey, I'm Channing Moore, owner of Bayou Mortgage, and today I want to jump in and tell you specifically what goes into your mortgage payment so that you know exactly how to budget for your next home. So, the problem that we see a lot of times is that our clients are going online and they're utilizing online mortgage calculators, and this could be from Zillow or Bankrate or all these other different companies that advertise online mortgage calculators. And the problem with them is that they don't always give you quite the full picture you need in order to understand exactly how much your mortgage payment's going to be. A big reason for this is that they don't accurately calculate all of the additional expenses that go into your mortgage payment, and you end up with a number that seems lower than what it actually might be. In fact, not that long ago, I was working with a client and they texted me and they said, "Hey Channing, the payment you just sent us is about $500 more than what we were expecting." And so as a lender, I'm going, whoa, that's crazy. We're never that far off. What's going on? Well, it turns out he had just taken the loan amount and divided it by 30 years and said that's what his payment was supposed to be, and didn't factor in the interest and all those other things that we're going to talk about today. So it's a big deal because it's going to affect how much you're spending every month. And if you think that you can spend one thing and then you find out another, then what happens is you know, maybe you're looking at $250,000 homes and you can only buy a $200,000 home, and now you're disappointed because you've been looking at more expensive homes. So I want to dive in and I want to show you exactly everything you're going to need to know in order to calculate the right monthly payment for you in your home buying experience. So the very first thing you might hear sometimes referenced either by a mortgage lender or someone else involved in the process is an acronym known as PITI, and that's P-I-T-I, P-I-T-I, PITI. And that is a representation of exactly what goes into your mortgage payment. And the first one in PITI is principal. The principal is the amount of money you're going to pay back based on the loan amount. So if you borrow $200,000, your principal payment is based on $200,000, and if you borrowed it for 30 years, divided by 30 years. If you borrow for 25 or 20 years, then it's divided by those years. That's going to give you your monthly principal payment. Your principal payment is simply a reflection of the amount of money you borrowed over the amount of time that you borrowed it for. Now, it's important to know that each payment that you make every month is going to reduce your monthly principal by some amount. Now, because mortgage loans tend to be really long and they last for 30 years or 25 years or 20 years or 15 years or whatever you decide to go with, it's important to understand that most of your payment when you're making it, especially in those first 10 years and the first half of the loan, is a very small amounts going to the principal, and most of it is going to interest because it's spread out over such a long period of time. And that actually brings me to the second part of PITI, which is interest. The interest payment that you pay on your loan is going to be the most significant portion of your principal and interest payment during that first 10 years, because like we said, mortgages tend to be spread out over a long period of time, and your interest is going to be determined by your interest rate, and the amount of money you pay towards interest is determined by your interest rate, how long you finance the loan. So your interest payment, most of what you're making every month, especially like I said in the first 10 years, is going to your interest payment. That's why some people, and we even recommend this to our clients, is it might be worth it to consider getting a house that you can afford at a 20-year mortgage or a 15-year mortgage, because the more you can reduce the amount you're going to pay in interest, the quicker you're going to be able to pay that home off. Now, the reality is with housing appreciation, the way that it is across the country and even here in Louisiana, is, you know, most people, in order to get the home that they truly love, are gonna have to finance that home for 30 years. But don't fret, there are some other things you could do to help yourself pay off your loan quicker. One of those would be setting up a bi-weekly payment instead of a monthly payment. If you do a bi-weekly payment, you could pay your mortgage off sooner simply because you're making 2 payments every month instead of 1, even though the amounts might be the same. It's gonna reduce the amount of interest that you pay. Another example would be to pay down your mortgage a little bit more to your principal every month over your mortgage payment. So let's say that we'll do the calculation here that you decided to buy a home for you borrowed $225,000 to buy a home, and your interest rate is 4%, and you financed it for 30 years. Well, your monthly payment, which is your principal and interest, is going to be $1,074.18. If you paid, and that's going to take you 30 years to pay that off. If you paid an extra $100 a month, you would pay your loan off by 54 months sooner, which would save you $27,453 in interest. Now that's just crazy. So there are things that you can do in order to get that monthly payment down. Even if you do have to go and finance that property for 30 years, you can see that just making an extra $100 a month towards the principal is going to have a dramatic effect on helping you cut the interest out and pay that home down faster. If you want to view some of this and how we kind of look at this, what you're going to want to look at is a mortgage calculator with an amortization schedule. We'll drop a link for it. There's one on our website. But when you look at that amortization schedule, it's going to tell you how much of every payment is going to interest versus how much of every payment is going to principal. And you can see how that begins to change over time, where it starts with interest being the primary and then it flips to your principal being the primary as you pay the loan down. So definitely check out that if you're interested in learning more about how all this works and how to pay your loan off faster and all that good stuff. Now the next factor in the PITI acronym is your property taxes. Your property taxes are going to be the amount that you owe to the government every single year. And if your loan is escrowed, which most are, your lender's going to take your annual property taxes and divide them by 12 and put that as a monthly payment, all wrapped up into the monthly payment that you make them every month. Now, the way property taxes are derived is you take the value of your home multiplied by the tax rate that your county and local government comes up with, whether you're here in Louisiana or somewhere else in the world, minus any exemptions. So the really cool thing about borrowers in Louisiana and maybe in other states is that Louisiana has a homestead exemption. So Louisiana says that at the first $75,000 of property value on your home is tax exempt. They're going to deduct it, and you're not going to pay taxes on the first $75,000. Now, the catch is that the home must be your primary residence. So if you own multiple homes, you're only going to get the exemption on your primary residence, but it does help to reduce the tax bill that you're going to have to pay every single year. Usually your tax bill is a combination of county and city if you live in city limits taxes. Some other areas could have MUD taxes, they could have school specific taxes, all of these different things could apply. For the most part in Louisiana, you're either paying parish and city or just parish taxes as part of your tax bill. So when you're thinking about your mortgage payment, it's always important to remember and consider that you will have property taxes due. A lot of the parishes in Louisiana, and I know in Texas because I've worked there as well, have online websites that you can go to calculate an annual tax payment based on the price range that you're looking in. And then once you find a home, you can actually pull the property tax bills and look at what those taxes are going to cost. But I'll caution you on that. Just if you're paying more than what the property value is currently worth, the property tax bill for that year is likely going to increase once you buy that property. So the last part of the PITI acronym, and the last part that you have to consider in what's going into your mortgage payment every month, is your insurance. Now, every person who buys a home is required to purchase homeowners insurance, and your homeowners insurance must cover the loan amount that you're borrowing against that home. So if you're borrowing $225,000, you usually have to have homeowners insurance. You do have to have homeowners insurance to cover you for $225,000. Now, most lenders are going to require what's known as replacement cost coverage. Now, you have replacement cost coverage and you have actual cash value coverage. And the difference between the two is that replacement cost is going to rebuild your home in the event something happens for what it would cost to rebuild it today. An actual cash value is more like market value, and that it's going to take the cost to rebuild and subtract any applicable depreciation that would have acquired. So most lenders, you can tell, are going to require you to get replacement costs because they want you to be able to rebuild a home for the same value as the one that you originally financed with them. Your homeowner's policy, especially if you're in Louisiana, if you're watching this and you're in a state that doesn't get hurricanes and things like that often, then this could be different. So it's like California, you got earthquakes and stuff like that. But in Louisiana, your homeowner's policy is typically going to cover wind and hail, fire and theft. And it's going to protect you against tropical storms and hurricanes. But some insurance carriers, mainly the ones that advertise a lot on TV, are going to charge you a much higher deductible if it's because of a tropical storm or a hurricane, if the damage occurs, versus if it's just normal wind damage. And when I say much more, I'm talking about a 5% hurricane deductible, meaning 5% of your replacement cost value you have to pay for out of pocket, which could really add up to thousands and thousands of dollars. So just like shopping with us as local mortgage brokers, we highly recommend you shop with local insurance brokers as well, because while the big box companies have great advertising budgets, they really do charge you a lot more money than what you could get by going with an independent insurance agent. A lot of our clients are able to get 2% hurricane deductibles, 1% hurricane deductibles, and sometimes even on new homes, a flat $1,000 deductible. So all of those are definitely things you want to consider when you're thinking about your insurance, because not all companies are the same. And most of the times, the companies that come to your mind are going to have more expensive premium. They're going to charge you more in the deductible area, and they're going to provide worse customer service. So do yourself a favor and shop with a local shop with a local independent insurance agent to get the best deal. Now, the other parts of your homeowner's insurance that you're going to receive are things like other structures coverage. So it's not just going to protect your house. If you've got a shop or something like that, it's going to be protected as well. But you're also going to have liability and medical protection. So if someone slips and falls at your home, you can have legal protection against that up to a certain amount. You're also going to get protection for other coverages if you ask for them. Sometimes you have to ask, sometimes they're not included, for things like if a sewer were to back up and flood your home. That's not going to be covered by a normal homeowner's insurance policy. That's going to be an added coverage that you'd have to get. So there's all these little things that you have to consider when getting that homeowner's insurance to make sure that you're getting a good policy. Now, I often get asked, like, what determines my insurance premium? And there's basically three things for sure that they're looking at in order to determine your premium. The first is the location of the home. If it's in, a high crime area or things like that, it could have a negative effect on your premium. They're going to look at your personal credit score, because they've said that how you treat your credit is a high determination of whether or not you will do something fraudulent. Whether you agree with that or not, that's how they do that. And the last thing is your claim history. Obviously, if you've had claims, you're going to pay a higher premium than someone who hasn't. So those are going to be the three things that will be factored into that insurance payment, which is factored into your overall mortgage payment. Now, another important note, because you're probably in Louisiana if you're watching this, or Texas, or you know me somehow, is flood insurance is not required or is not covered with your homeowner's insurance policy. So if your home floods and all you have is a homeowner's policy, you will not be protected from the flood damage. You will have to spend your own money out of pocket in order to have your home repaired. And so I think it's a really important thing to just tell you that Flood Zone X, while flood insurance is not required by us as the lender, it is still absolutely a flood zone. And if you can afford it, the premium on a Flood Zone X policy is like maybe $400 a year. And for most of my clients, they agree it's worth it to have the peace of mind, especially if you live in Louisiana, where you never know what's going to flood next. I mean, we live in an area where things flood all the time. So really important to keep that in mind, that your flooding of your home is not covered unless you have a flood policy. And those premiums can range, right? If it's in Flood Zone X, you're probably looking at $400 a year or less. If it's in Flood Zone AE, which is the most common flood zone where a lender is actually going to require you to get flood insurance, your premium could be $1,800, $2,000, $2,500. What actually determines the premium is something called an elevation certificate, which basically tells the insurance company how high the specific home is above that floodplain. So if it sits real low, the premium is going to be more. The higher up it sits, the lower the premium it's going to be. So keep that in mind, because that's an extra cost if you're looking at homes in flood zones that you're going to have to spend every month. And you can see it could easily be an extra $200 a month that you're paying just because you bought a home that's in a flood zone. Now, the last thing, and I just kind of want to mention this as an aside, is that if you purchase a home in a homeowners association or purchase a home in a community that has a homeowners association, that too will be an added cost onto your mortgage payment. Now, sometimes, it could be $1,000 a year, or if you live in a community with a lot of amenities and a lot of upkeep, you could be looking at $5,000 a year or $2,500 a year. So really important to understand if the home you're buying does have an HOA, because it will also add to your monthly mortgage payment. All right, so that is PITI. That is what goes into your mortgage payment. I hope you find that helpful. If you have any questions, as always, our contact info is going to be in the description below, or there will be a link to reach out to us or qualify or something to that effect. But now you know exactly what goes into your mortgage payment and exactly what you can begin to prepare and expect whenever you're purchasing your home. So as always, I'm Channing, owner of Bayou Mortgage, and I look forward to talking to you soon.